All right, welcome. This is the Austin Real Estate Today Radio and Austin Realty podcast. It's our special December market recap. We're going to go through some specific numbers. I've got a special co-host today, Mark Martin from Re Max Austin Skyline. Mark, are you on there with me?
I am. How are you, Kevin?
I'm doing well. Well, happy December to you. We're turning the corner to what in many markets across the country is a time that they slow down. You know, if you're up in the Midwest or the Northeast, although it hasn't gotten that cold yet, it's supposed to be cold this time of year, and their markets historically slow down. And even in Austin, after Thanksgiving, usually things would slow down. What's going on out there? It doesn't appear to be slowing to me.
Not at all. We've had a very successful November and rocking into December with more pendings than I've had in 12 years. So it's definitely a great market.
Well, you know, and from my perspective, you know, and I've looked at the market for a long time like you have. I originally moved here in 1997. This is just a huge confirmation that not only is Texas pro-business, but the Austin Central Texas market is getting all of the benefits of being one of the lowest unemployment rates, one of the largest job creators. We saw that happening in stories that have come out in the last month with Visa moving an IT center into town. GM has announced they're doing that, and just company after company is talking about hiring more people and hiring shortages. And that's
right.
Driving the market. And we sort of have what other parts of the country don't have, don't we?
Oh, absolutely. I mean, we just have never experienced the significant ups and downs that the other parts of the country has because of our economy, and you know, our unemployment rate continues to be a full point or more below the national average, and you know, Texas is just an excellent corridor for energy and finance and, you know, all the major employer bases.
Yeah, and you combine that with the lifestyle benefits of why people, when they get here, because a lot of people have historically experienced Texas, and if you're listening to this and your experience of Texas going from one gate to the other at Dallas-Fort Worth, you haven't seen Austin, and you owe it to yourself to come into the Central Texas, Austin area and experience the Hill Country. And I know that's what happens for a lot of people is they happen to come here on a business trip, they happen to come here to visit family, and then it becomes high on their priority list to move here, doesn't it?
Oh, absolutely. Absolutely. I mean, you know, we just had the F1 event with several, you know, 100,000 people in town, and it's just going to continue to get bigger and bigger as people discover Austin and how great it is to live here.
Well, Mark, let's spend some time talking about the numbers. I'm going to flip screens here in a minute, but we actually both utilize a tool that we call the Total Market Overview. And this is something that you and I have both used for quite some time. It was something that we developed, and there will be a link to both of these in this broadcast. But the Total Market Overview is really kind of like a dashboard into the market, you know, because historically, and I know you feel the same way I do, what you end up seeing is you end up seeing agents that when they asked about the market, it's either fantastic and all good and things are great, or whatever their sort of subjective view of the market is. And this provides a dashboard that whether you're a buyer or a seller, you can get down and understand what's going on in the market with a small set of numbers. I mean, you and I are both aware of other agents, not only in Austin but around the country, that try and run around with 15-page market reports that are overkill, aren't they?
Oh, absolutely. I mean, it would take forever to dive into it, and you know, the buyers, no matter what is going on in your price range, both historically and recently, and then predict what it's going to take to win the purchase or to, you know, get the highest price possible if you're selling.
Yeah, you know, and I kind of zoomed in here so we can talk about this. This is the most recent report that came out this week. And, you know, if you look at the sort of the near the median price for Austin, or call it average or median price, if we were to look at, for example, that 200 to 250,000 price range, you know, very quickly you can see, you know, across the Austin marketplace, there's 683 properties for sale, 335 of those are pending, and 182 of the 335 went pending in the last month. So 1 in 2 listings is in contract. That is, as we'll see in a minute, much higher than it was last year, isn't it?
Oh, absolutely. absolutely. I mean, the pending ratio is
You
just
know,
off the charts.
yeah, and so you're mentioning a key thing that we talk about, and it doesn't matter whether you're a seller or a buyer. We talk about this pending ratio, and what we do is we go through and we explain how it affects you, whether you're buying or selling. And if you're buying, the higher the pending ratio, the more buyers relative to supply you're competing with, right? And it'll reset your expectation. If you're a seller and you're in a higher pending ratio, it doesn't mean you can overprice your listing, but what it does mean is you certainly have the opportunity to sell quicker, don't you?
Oh, absolutely, absolutely. You know, and of course, on the days on market are going to reflect that, but the speed at which things are moving, you know, we're having a significant problem right now getting our buyers to pull the trigger fast enough before the house goes under contract with someone else.
Right. Well, and what's interesting about days on market, and this report has that on there, and I want to touch on that because a lot of agents, it doesn't matter if you go to Trulia, you go to Zillow, you go out, and wherever you are, and you hear them talking about days on market, and I think what my personal opinion is it's a complete distraction for buyers. And we can look at this report, and you've got the report, and I do as well, and in this 200 and 250,000 price range, if we were to look at the report, right, we're talking about things selling for 55 days on market, right?
Mm-hmm.
Well, that's
yep. And just
completely
for the viewers,
misleading for what really goes on in the market.
Oh, in some sub-markets, things are selling in a matter of 2 days.
Right. And what I want to talk about this, just so people understand, is don't focus on the days on market over there. I mean, if you look at it, the difference between days on market at 250,000 and you go all the way up to 500,000, you're talking about 10 days difference. And you're talking about a world of difference in how fast things sell. The pending ratio is a much better indicator of the relative strength of the market. And I'll just give you the two numbers. We talked about the one being 1 and 2 listings in contract in 250,000, right? You're right in that 50% range. You go up to 500, 550, it's 21%, 1 in 5 listings. It's a whole different market, although the days on market don't reflect that completely, do they?
Correct. Correct.
So one of the things, when people go and look and download this report, they can understand pretty quickly, and you and I talked about this morning, is we also track the number of expireds and the number of closings in every price range. And so when you look at it in this $200,000 to $250,000 range, there are a lot more properties closing than expiring in the same rolling 6-month period, aren't there? I mean, it's like
Correct.
Almost a 10-to-1 ratio, isn't it?
Yep, absolutely. I mean, only 10% of the properties
versus 161.
Yep. So only 10% of the properties, are not selling in effect.
And that's very different than it was a year ago. I mean, I know the number. What was the number we talked about this morning? You said there are close to 1,000 fewer expireds in the last 6 months than there were during the same 6 months.
Exactly.
During last year. So that translates, if you're a buyer, into significant competition, meaning that there is not as much inventory, things are selling, and they're not sitting on the market and languishing. And if you're a seller, you have to be well priced, but you also have to know where you're going. You can't put your house on the market and wonder, well, I'll just take my time and start looking. You've got to know where you're going to move to because you might be under contract the first weekend. You go on, even in December.
Yep. I mean, we're going to, we're looking at new listings now that we'll put on in January and February that we would have never recommended go on until probably March or April historically.
Well, and as you know, there's that whole gating of listings. People talk about in the real estate business, our peers try and coach people to let their listings rest over the holidays. No, it's a personal opinion for sellers. They could decide they don't want to be on the market, and for various reasons they don't want to have, because they have family and other things, that they don't want to be actually for sale. And you and I both are aware of these private listing programs. You operate them. I'm aware of them. I'm familiar with it. I used to do it in St. Louis as well, that allow people to be off the market but still listed and exposed to relocating buyers. But the vast majority of people are not on the market currently, right?
Right, exactly.
So what happens is you get this huge rush of listings that come in late February and March. It starts towards the end of January, but really picks up in February and March. And if you're a seller now in December going into January, you could be under contract pretty quick and not have a lot of listings to choose from.
Oh, absolutely. Absolutely.
It becomes an interesting dynamic. Most sellers, if they talk to the average agent that doesn't do a lot of business, don't get coached very well on that. And I know that you and I both talked to people who didn't sell and they failed. We call them expired or withdrawn listings. They pulled their house off the market, and I know I hear it, and I'm sure you do. People sometimes take their house off the market not because it didn't sell, but because they got scared, and they were flipping out because they had 3 contracts come in, and they didn't know where they were going to move, and they didn't want to be homeless.
Exactly.
That's
exactly.
a unique problem to Austin, isn't it?
Well, it is, and we have that problem, going on right now with several of our clients, of our sellers, that, we're having a difficult time finding them a new house, and it puts them in a really awkward position. They either have to move into an apartment or decide not to sell, or, look at plan C, D, and E.
Absolutely, absolutely. So if we look at some of the key things in the report, and we have last year's report available here as well, if we kind of look at the overall market, inventory's down, isn't it? I mean, we were at this point, same week last year, we were a little over 6,200 active listings. Now we're sitting almost 1,000 less listings active, aren't we?
Correct.
Do you think that the inventory is going to right itself in February and March, and we'll get back up to higher levels, or things are selling so much quicker that we're going to stay at pretty tight inventory levels for at least the first 6 months of 2013?
What I'm coaching my folks on, Kevin, is that interest rates are still at historical lows. Nothing has changed from a job market standpoint. We still have close to 200 people a day moving to Austin, so the demand is not slowing down. And we're seeing November and December of this year being huge months where historically they weren't that big. We're up 30, 35%. So the demand is there. So I expect January, February, March to just be, as strong or stronger than it's currently going.
Yeah, I would expect that to be the case too. That's what I'm talking to my clients about as well. And you think about the National Association of Realtors. They certainly talk about a market that is tight and competitive, whether you want to call it 6 months of inventory or 6.5 months of inventory. And if you look at our market, currently, anything below $500,000 for pricing is below that threshold, isn't it? It's either moderately a seller's market to an extreme seller's market. You look in the lower price points, and you're talking ridiculously low inventory levels. Like if you get below 175,000, you're talking 2 to 2.5, 2.75 months inventory. And in those price ranges, if you're listening to this, you're talking about competing with up to 10, 15 offers if you're in a very highly competitive part of Austin in that price range, and things selling immediately. So if you're a seller, you should be ready to be under contract if you're working with the right agent or team that first weekend and or first week. And for buyers, this means you have to not only be pre-approved, you got to be pre-approved in writing. This doesn't mean you can call up Chase or Wells Fargo or your national lender of choice, give them some information verbally, and expect that to be accepted, because I can tell you as a top listing agent, I don't accept those. I'm sure you don't either, Mark. You insist that a written full review and pre-approval was done, and there's no faster way to lose in a multiple offer situation as a buyer than that, is there?
No, absolutely. And I definitely coach my sellers to, pretty much ignore offers that don't come with a full pre-approval, where credit, not only credit, but assets have been verified, income has been verified, tax returns from the last 2 to 3 years have been verified, so that we know we're dealing with a legitimate buyer. Because the worst thing that can happen is we take it off the market on one contract, they don't qualify, and we've just lost 2 to 3 weeks of time on the market that we could have taken other offers.
Right, yeah, and it's a problem. And so for those of you that are buyers coming into Austin, if you're running around and you're calling signs and you're calling and working with a number of different people and you're signed up on 4 or 5 websites, if your real estate representative is not coaching you on how to win and talking the talk like Mark is, you very well might be working with the wrong person. And I can tell you, I've picked up plenty of people that were disappointed previously and lost out on their first choice home. I'm sure you have as well, Mark, where they didn't get the hard facts from an agent. This is because it's a hot market. If you're a buyer, you can't be working with the second tier of agents, people that work part-time. You just can't. It's not that they're bad people, but you're not going to get your first choice home if you're not working with somebody that's going to tell you candidly, you have to get approved by a lender that I know locally that a listing agent's going to recognize, and we're not going to lose out to another buyer. And I know, Mark, you have those conversations with clients, don't you?
No, absolutely. I mean, it's, for us, the number one thing you're hiring is a strong negotiator, buyers and sellers alike, but the number one thing that we do and stress is that we've got to be able to negotiate on your behalf and get you, what it is you want, whether you're buying and want the best deal, but also to secure the property, or whether you're selling and want the best price. So definitely pays to operate with the top.
Well, absolutely, and so let's touch on that, because we've talked about the buy side, and then I'll talk a little bit about the luxury market and get your take on that, because it's a little different than the lower end. But one of the things you see is a misperception by sellers that they can just hire any agent because it's a hot market. And the way this scenario likely plays out is exactly what you just described, Mark, which is they go on the market, they weren't coached that they're going to sell quickly, now they get caught in a pickle, they don't know where they're going to be able to move to, or they took the wrong offer because it was the highest. Let's say it was $5,000 higher than the other one. Now, they've made a whole bunch of arrangements. They're off the market for 10 or 15 days, and now the deal starts to crater because their agent didn't properly help them and advise them to take the right offer, which isn't necessarily always the absolute highest. And now those other offers went and bought other homes, and so now they're delayed, and they may or may not get their best price because they got to go back on the market, don't they? And
no, they do. And
you see that these properties go on the market, they come off, they go on again. I've seen it happen like a revolving door. They go on and off a couple times, and coincident with that is quite often a lack of experience on the listing agent's part, isn't it?
Right. I mean, you think between the two of us, each of us have negotiated and closed well over 1,000 homes in our careers, and the typical agent, average agent in Austin sells 3 homes a year, and the overwhelming majority of agents have never been in a multiple offer situation. So they don't know how to coach their clients on what the best offer is going to be, nor do they sometimes understand the timelines that they have to adhere to and the rules of engagement. So, it's very easy to mess that up, and for lack of a better term, and negotiating through that, the other thing that happens is we ran into it. We sold a house 3 times because the first 2 buyers couldn't qualify and looked great on paper, but what happened was the house that my folks were going on then to buy once they're sold, we had to continue to extend that one, and we were at risk of losing that one because the first ones weren't coming through. So it's even in the best scenarios, there's still times that people don't qualify. So you just got to make sure you're using a really, really good magnifying glass.
Well, and let's talk about the reality. I mean, because I know you've had some of these come up in 2012. I've seen it. You and I talked about it one day when we were masterminding, like good agents do, about how to resolve appraisal issues. In a market that's moving, like Austin, Central Texas, if you don't stay within the realm or the envelope of what a lender will allow appraisers to run with, your property is going to have a shortfall on financing. So sometimes you have to restructure things and then give bad news to sellers, don't you, Mark? If they took too high a price relative to what it's going to appraise for.
Right.
And all we can do is advise, but those agents that sell 3 houses a year don't even get that they should set that expectation with the seller that we're likely to have a problem with an appraisal. And you need to have that conversation with the seller so that they don't feel like it's a huge takeaway. I mean, it's a gift if you get 10 offers and you get 10,000 over list, but you best talk to your seller about the fact that what are you going to think if it doesn't appraise, because we could go through this 3 times in a row, and then your property's been marked with, that thing won't appraise, don't even worry about trying to buy it at that price.
Right. And, unless the
and I know,
buyer changes lenders, and even then, I mean, there's only a limited number of appraisers, and they all use the same comparables. So,
well, and a good buyer agent, and a good buyer agent's going to ask the right question, aren't they, Mark? And if I were to ask you, if you were a listing agent, tell me about why it didn't sell. Did you have a property issue on inspection, or was there a valuation issue? And we can't lie to people.
Right.
About
right.
what happens in transactions.
Yep.
So, I mean, the sellers have to understand that. We can't mislead the rest of the world. We could blame it on an appraiser, but the fact of the reality is, if an astute buyer agent asks the right questions, they're going to be able to discern directly and indirectly what happened with it. And that's a good transition to the upper end of the market. There are some buyers that love a property, and this typically happens at the higher end of the market, that they don't care if it doesn't appraise. They'll bring the difference. If it's $25,000, for example, and it's a home in Terrytown, and they want to live by a certain elementary school, and it didn't appraise, they'll just pay the difference because they're planning on living there, and for them, $25,000 is not a big deal.
Right.
I know you've heard of it. I've seen it. That should not be your business plan for selling your house. Again, if you don't have an experienced agent, you're not going to see that, because your depth of your buyer pool, and if you look at these higher price points, I mean, we just have them up there. I mean, we were just talking about 250,000, Mark, where there's, I think, 145 pendings in the last month. Now let's go look at 750. If I scroll down here, you look at, there were 7 or 9, depending on which price range, between 7 and 800,000 you go through. So in a $100,000 price range there, between 700,000 and 800,000, you're talking about 16 buyers. Whereas in that 250 price range, there were 145. What this means is, if you shoot yourself in the foot by hiring the wrong agent, misnegotiating a contract, you could be sitting for a long time in a high price point, couldn't you?
Yep. And, agents, especially in the higher end, it's a small group, and they know these properties, and they know the history, and they can look back and, see what's going on. And you've got 128 properties in that $100,000 difference there, and you've got 16 that went under contract. That's going to take a long time to sell all those properties.
So Mark, as we wrap up here, because I want to tie down some of these trends for people. Obviously, if I'm below 250, 300,000, we're in a tight market, multiple offers, correct?
Correct.
Unless I'm in a specific submarket where it's relatively weak. But overall, on average in the market, we're talking about multiple offers. I'll give you that caveat. And each progressive $100,000 we go up above the 250 or 300,000, it gets progressively less strong. Doesn't mean you can't sell. Well-priced listings are selling at all price points now. There's, we were talking about a neighborhood like River Place where a lot more homes sold in the third quarter this year than they did last year. The market's tightened up there too, but it doesn't as tight as, for example, an area like Circle C or areas like Cedar Park and along Anderson Mill or other areas like you and I do a lot of business in. And things tend to sell quicker in the lower price points. Now, Mark, these reports will be available, linked to this recording. You make these available to any client, seller, or buyer that you work with. So if somebody's interested, they listen to this. This is a December recording. It's now March, and they want to get current data. Your contact information will be in the description below this recording, as will mine. They can reach out to me or Mark if you're interested in getting this data. We'll be back in a month. I'm just kind of curious, Mark. It'll be the first part of January. We'll be turning the corner. Anything interesting you think will happen, or we're going to stay the trend as we wrap up here for the rest of December into January? Tight market, kind of just really kind of trudging along and nothing big changing. What's your expectation?
No, I think, December will close strong for sure. January is always a bit of an unknown, but what we do know is there's not going to be hardly any new inventory coming on. So what goes under contract in December, that's just going to be that many less homes that are available in January and February. So if you're moving here and relocating, that's even less to choose from. So, we won't see the influx of new properties until March and April.
It presents a challenge. Well, and that's the other thing I would say as we wrap up here, Mark, is if people are thinking they want to move in the spring, March, April, May, June, they should be in touch with us now, shouldn't they? Because there are houses
Absolutely.
we're aware of that we know are going to be coming on the market that they don't want to wait till they come on the market potentially. They want to be talking to us now about, can you find me something in Circle C? Can you find me something in Lakeway? Can you find me something in Steiner Ranch that is going to be on the market in March, because I don't want to compete with 15 buyers.
Correct. And that's where our private.
I have those conversations with people, right. And I have those conversations, and I know you do as well. So, Mark, I appreciate your time today. We'll be back. Mark and I are going to be doing this on a monthly basis, and we will have, I expect, an exciting spring, won't we, Mark?
Absolutely. I can't wait. Thanks, Kevin.